Hello and welcome back to XRP Pulse, your trusted source for the latest updates from the crypto market. Today we're covering a major story that has traders, investors, and institutions paying very close attention. The crypto market is under heavy pressure once again as Bitcoin, Ethereum, BNB, XRP, and Solana continue extending losses while a deepening sell-off shakes confidence across the entire digital asset space. What started as a pullback has now turned into a much broader risk-off move, and many traders are wondering whether the worst is over or if more downside could still be ahead. Throughout today's update, we'll break down exactly what's happening, why prices are falling, what the liquidation data is telling us, and what investors should be watching next as market conditions continue to change rapidly. The pressure across crypto markets has been impossible to ignore over the past several days. Bitcoin has now fallen 13.8% during the last 7 days, erasing a significant portion of the gains that many investors were celebrating just a short time ago. Ethereum has also suffered substantial losses, dropping 12.3% over the same period as sellers continue dominating short-term price action. The weakness is not limited to just Bitcoin and Ethereum. Nearly every major cryptocurrency has moved lower as investor sentiment becomes increasingly defensive. Market participants who were expecting support levels to hold have instead watched key technical zones break down one after another. As a result, fear has returned to the market, and many traders are reducing exposure while waiting for clearer signs of stability before becoming aggressive buyers once again. One of the most important aspects of this recent decline is the role that leverage continues to play. According to fresh market data, the sell-off has been significantly amplified by derivatives activity. CoinGlass reported that total liquidations reached a massive $1.72 billion over the last 24 hours alone. That is an enormous number and highlights just how much leveraged positioning had built up throughout the market. Even more importantly, long positions accounted for approximately $1.41 billion of those liquidations. This tells us that bullish traders were heavily exposed, and many were forced out of their positions as prices moved lower. When liquidations reach this scale, the selling often feeds on itself. Forced exits create additional pressure, which then triggers even more liquidations, creating a cycle that accelerates market declines and increases volatility. Bitcoin remains at the center of the story because it continues to act as the primary indicator for broader crypto sentiment. The flagship cryptocurrency recently moved below the critical $64,000 level, a support area that many analysts and traders had been watching closely throughout the week. Losing that level has increased concerns that the market may need more time before finding a sustainable bottom. Looking at recent price action, the pattern remains concerning. The chart continues showing a series of lower highs and lower lows, which is one of the clearest signals that sellers currently maintain control. Each attempt by buyers to create a meaningful recovery has been met with renewed selling pressure. Until Bitcoin can begin reclaiming lost support zones and establish stronger momentum, many traders remain cautious about calling for a major recovery. The psychological impact of Bitcoin's decline cannot be overstated. Whenever Bitcoin experiences weakness of this magnitude, confidence across the entire digital asset market tends to deteriorate quickly. Investors who might normally be interested in buying altcoins often become more defensive because they understand that continued Bitcoin weakness can drag the rest of the market lower. This creates a situation where liquidity moves away from risk assets and into safer positions. That trend has been visible throughout the current correction. Many market participants are choosing to preserve capital rather than aggressively buy dips. While some investors view sharp corrections as opportunities, others are waiting for confirmation that the market has stabilized before committing fresh funds. Ethereum has also faced significant challenges during this latest downturn. After losing the important $1,900 level earlier in the week, ETH has struggled to regain momentum. The asset is now trading near the $1,760 region, reflecting ongoing weakness across both spot and derivatives markets. Ethereum's market capitalization has fallen substantially as a result, highlighting the broader impact of this correction on investor confidence. The inability to reclaim previous support levels has added to bearish sentiment. Many traders now view the $1,900 zone as a key area that bulls must eventually recover if they want to restore a more constructive outlook. Until that happens, Ethereum remains vulnerable to additional volatility and further downside pressure if broader market conditions fail to improve. Another major focus for traders has been Solana, which has emerged as one of the weakest large-cap cryptocurrencies during this recent sell-off. Solana declined 5.3% in just one day and has now fallen an impressive 15.6% over the last week. Among the major digital assets, Solana has experienced some of the sharpest losses, reflecting both broader market weakness and increased sensitivity to risk-off conditions. The decline has pushed the asset toward important support zones that traders are monitoring very carefully. If those levels fail to hold, some analysts believe additional downside could become possible. At the same time, supporters of the project continue pointing to strong ecosystem development and long-term adoption trends, arguing that short-term volatility does not necessarily change the broader investment thesis. While most major cryptocurrencies have struggled, there has been one notable exception. Hype managed to remain positive on a 7-day basis despite experiencing a significant pullback during the latest session. Even so, the token fell approximately 6% over the last 24 hours, demonstrating that no corner of the market has been completely immune from selling pressure. The fact that Hype remains one of the few assets still showing weekly strength has attracted attention from traders looking for relative performance leaders. However, even stronger assets can face challenges when the broader market environment becomes increasingly defensive. Investors continue watching whether Hype can maintain its relative strength or whether continued market weakness will eventually pull it lower alongside other cryptocurrencies. The liquidation figures themselves tell a powerful story about current market conditions. A total of $1.72 billion wiped out within a single day represents one of the clearest signs that leverage remains a major factor driving price action. Markets often become unstable when traders rely heavily on borrowed capital, because even modest price movements can trigger cascading liquidations. Once those liquidations begin, the resulting volatility can become self-reinforcing. That appears to be exactly what happened during this latest decline. As bullish positions were forced to close, selling intensified and pushed prices even lower. This created an environment where traders were reacting to rapidly changing conditions, leading to increased uncertainty and heightened fear throughout the market. Another important observation is the imbalance between long and short liquidations. With long positions accounting for roughly $1.41 billion of the total liquidation figure, it is clear that bullish traders bore the majority of the damage. This suggests that many market participants were positioned for continued upside before the sell-off accelerated. When a market becomes overly optimistic, leverage often increases as traders attempt to maximize returns. Unfortunately, that same leverage can quickly become a liability when prices reverse direction. The recent liquidation wave serves as a reminder that risk management remains one of the most important aspects of trading, particularly during periods of heightened volatility. Market sentiment has shifted noticeably during the past week. Earlier optimism surrounding potential breakouts and bullish continuation patterns has largely been replaced by caution and uncertainty. Traders are paying closer attention to support levels, liquidity conditions, and macroeconomic influences that could affect risk assets. The speed of the decline has also contributed to nervousness because sharp moves tend to create emotional reactions among investors. Some traders are worried that additional selling could emerge, while others believe the market may be approaching a point where excessive pessimism creates opportunities. These differing perspectives are contributing to a highly dynamic environment where price swings remain significant and confidence remains fragile. Many investors are now asking whether the current sell-off could eventually create conditions for a meaningful recovery. Historically, large liquidation events have sometimes helped remove excessive leverage from the system, allowing markets to reset and establish healthier foundations for future growth. While that possibility certainly exists, confirmation remains limited at the moment. Markets typically need time to absorb major shocks before confidence returns. Traders are therefore watching closely for signs that selling pressure is beginning to slow and that buyers are gradually regaining control. Until those signals emerge more clearly, caution is likely to remain the dominant theme. Institutional activity is another factor that market participants continue monitoring closely. Large investors often play a major role in determining overall market direction, particularly during periods of uncertainty. When institutional demand weakens or becomes less visible, it can contribute to broader concerns about market strength. At the same time, institutions often take a longer-term approach than retail traders, meaning their actions may not always align with short-term market fluctuations. As a result, investors are paying attention to fund flows, trading volumes, and other indicators that may provide clues about how larger market participants are responding to the current environment. From a technical perspective, several important support and resistance levels remain in focus across the market. Bitcoin's ability to stabilize and eventually reclaim lost territory could have significant implications for overall sentiment. Ethereum faces similar challenges as it attempts to defend key zones while searching for renewed momentum. Solana, XRP, BNB, and other major assets are also approaching levels that could influence future price direction. Traders understand that technical levels often become self-fulfilling because so many market participants watch the same areas. As a result, upcoming price action near these zones may play a crucial role in determining whether the market begins stabilizing or continues extending losses. Looking beyond short-term price movements, many long-term investors remain focused on the broader evolution of the cryptocurrency industry. Despite recent volatility, development activity continues across blockchain ecosystems, institutional interest remains present, and adoption trends continue expanding in various sectors. While market corrections can be painful, they are not unusual within the crypto space. Historically, periods of extreme fear have often been followed by phases of recovery and renewed growth. That does not guarantee an immediate rebound, but it helps explain why some investors continue maintaining a long-term perspective despite current challenges. As we wrap up today's market update, the key takeaway is that sellers remain firmly in control for now. Bitcoin is down nearly 14% over the week. Ethereum continues struggling below important resistance levels. Solana has recorded some of the sharpest losses among major assets, and liquidation data confirms that leveraged positions have been aggressively unwound. The $1.72 billion liquidation event highlights the severity of the current correction and shows how quickly market conditions can change when leverage becomes excessive. Whether this marks the final stage of the sell-off or simply another chapter in a broader correction remains to be seen. For now, traders and investors will be watching support levels, market sentiment, and liquidity conditions very closely as they search for signs that stability may finally be returning to the crypto market.